Hey guys, what's up? This is Tony from alphapursuits.com. In this video, we are going to do a year-end summary for the Strangle trades that I've been doing with longer days to expiration options. So if you have been following me for the last few videos, you probably already know that I've been doing these Strangle trades since July. So it has been about 6 months. Now it's year end of 2017. And as you can see on the screen here, there are about 70 trades that I did throughout this period for this particular type of trading. So the idea here is that I look for longer days to expiration options with high vega. This I kind of realized halfway through actually. Initially, I wasn't really looking particularly for options with high vega, but eventually I realized that probably with high vega I would have a better chance sort of winning ratio and better return. So let's take a look at here and see what I actually found out. So as you can see, it started off pretty badly, so to speak. I had quite a bit of loss, and some of this I actually held way too long. Even at the beginning here, you can see I traded 127 days, 98 days, and so on. So there's an interesting finding in regards to these trading day durations, which I'll share with you during this video. But let's just have a quick overview for now and see what exactly happened throughout this year for this particular trading. So as I say, July was when I actually started doing this type of trading, and it started out not too good, and then it started sort of picking up. There's quite a bit of green here, as you can see, so some winnings there, but then again, the lose, they're pretty big ones here. So here's kind of where I started to realize, I was holding on to the losers way too long. So I kind of fixed that a little bit towards to the end of the year. I stopped holding them as soon as I see there's no edge in terms of volatility, and sort of once the volatility drops, obviously I tend to trade this I tend to do this kind of trading right before the earning call. So right after the earning call, the implied volatility would drop, and then if I see there's no hope for me to recover, or for whatever reason I think that there's just no hope, I would just get out. And as you can see, that actually take that action here. After 6 days I got out. After 4 days I got out, and this one held a little bit too long after 13 days because I thought there was a hope for me to sort of recover a little bit. But as you can see, as going towards to the end of the trading year, there are more greens showing up, and obviously I'm looking at delta at 0.15, so there's about combined from both ends 30% of losing, 70% of winning. And interestingly enough, when we look at that ratio, so P&L overall had a pretty negative, almost negative 1,000 out of after doing this 75 trades. And winning was 51, losing 24. So overall it's about 70%, which comes to close to the expected range. Now when we look at the correlation for vega and return of investment, so what I'm looking at here is my assumption is if I trade on options with high vega, I'm more likely to succeed. And based on this, it doesn't seem like that. There are quite a bit of ones with low vega. I still managed to win quite a bit of those. So it seems like, yeah, vega, I mean, it does help, but that doesn't seem to be 100% of the case. It does help, but that's not the only solo factor for success. There, when we look at implied volatility drop, so here I see, okay, when I get in, let's say implied volatility is 100%, and then when I get out, let's say it's 50%, so the difference will be 50. And so I basically recorded that difference and compare that to return of investment. So as you can see, you know, the return of investment, they're pretty small for all the winning ones, because, you know, as soon as I see profit, a lot of time I just get out. And for the losers, you can see, you know, there are quite a bit of them that I hold on way too long, so I just keep dragging on and lost quite a bit there, which obviously is not the right thing to do. But again, implied volatility does seem to help. You can see, you know, higher implied volatility, it seems like I lose less, even though I do have quite a bit of low implied volatility difference, and I still managed to win. And then when we combine the two, so the Vega, you know, if the high Vega plus high implied volatility would actually help, that's sort of the assumption here for this correlation graph. And so, you know, when the implied volatility is high, Vega is high, yeah, it seems like, yeah, I do win them, but I also did lose them. So again, all these factors, they seem to help, but again, they are not sort of the definite sort of like, you know, a miracle indication of, okay, if you choose high Vega, if you sell high implied volatility, you definitely gonna win. No, that doesn't work like that. And what it really comes down to, I realized, so I plot a couple more to see, okay, what about day to expiration? If I trade longer day to expiration, do I actually make more money compared to trading shorter day to expiration? And again, you know, it looks like, yeah, I do win majority of them, but there are some that I lose quite a lot. And it's everywhere. It's sort of, okay, it doesn't really seem to matter if we just take that one element out and say, okay, if I trade long days to expiration options, do I win? Well, yeah, it seems like I do win, and it doesn't really matter how long or how short it is based on this data. Then this last graph is actually the eye-opener for me. So correlation between trade days and return of investment. So you can see the longer I hold, it seems like I lose more, and which is pretty obvious, because I know and I knew even while I was going through this trading, I was holding on to the loser way too long and not closing them out soon enough. So here's what I did. Interesting enough, when I replot this graph with only trading days that are less than 30, and then when we look at the P&L and everything else, it turned out to be pretty interesting. So P&L, it became $3,000 positive instead of negative 1,000 that we saw right over here with the everything added together. So this is really real eye-opener. Basically, if I had got out the ones I was losing, now obviously, you know, there's an assumption that the one that I, you know, well, let's just say if I hadn't had traded all those, if those long trading trades never happened, then this is what would have happened. I would have had made $3,000 instead of losing 1,000, and the winning ratio increased a little bit. Instead of 68%, it goes up to 76. And when we look at all the other, you know, parameters here, you know, correlation Vega to return of investment, I mean, it becomes clear all these do help, but again, it comes down to the trading days, it seems like. So it looks like as long as I keep it short, okay, there are ones that I lose, but the percentage of return of investment, so this is a negative return investment, this is the positive, you can see the negative is pretty small if I get out pretty early, whereas if I hold on to it, as you can see here, 15 days even, you know, went down to like almost minus 40% of the return of investment value there. So the lesson here basically is that this trading strategy does work as long as I keep it short. As long as I see, okay, there's no more edge in that trade, I should just get out, which happens almost always, or a lot of time, because I do this trade right before the earning call, or when the implied volatility is high. As long as it drops, I should just get out. So this is the basically data that I have. Hope this is helpful or inspirational for some of you guys. But this is definitely a good data for me. So moving forward, I would definitely look to trade, sort of get out as soon as I can when I see that I don't have an edge, and do not hold on to the losers. So that's a very good message and finding for me in here. So if you like this video, please follow or like the video, and if you would like to leave a message and any comments, feedback, I'm really appreciate it. So thank you for watching, and I'll see you in the next video.